Good morning, everyone. This is Stuart. To all the dads out there, hope you had a great Father's Day weekend. In today's brief update, we'll discuss the implications of the war between Israel and Iran and end with an update on artificial intelligence. I'm sure you're aware that Israel and Iran are engaged in a war at the moment. While the situation remains fluid, we do want to highlight a bullish longer-term scenario. If Israel is able to neuter the Iranian theocratic regime, which has been a regional sponsor of instability for decades, the conflict could end up being a major net positive for risk assets. The elimination of a potential tail risk to global peace could usher in a new era of Middle Eastern stability. Near-term disruptions to energy prices are possible as Iran produces 3 million barrels of oil per day and controls the Strait of Hormuz, through which 20% of the world's oil flows. However, an Iran that no longer poses a threat to its neighbors directly or via proxies could mean less need for defense spending targeted at the Middle East and eventually a modernized Iranian energy industry that increases its energy output and exports. Again, we don't want to minimize the short-term risks here as military conflicts are always serious in nature, but markets are pricing in a positive long-term outcome at the moment as far as risk assets are concerned, with the S&P up over 1% this morning and oil down 7% from its recent spike. Speaking of things that matter in the long term, we want to end on a positive note with a brief discussion of a recent blog post from Sam Altman, CEO of OpenAI. In it, he alludes to progress toward achieving artificial general intelligence, meaning an AI with superhuman cognitive abilities capable of surpassing human performance across a wide variety of intellectual tasks. Altman writes, "We're past the event horizon. The takeoff has started. Humanity is close to building digital superintelligence." He talks of a gradual but impressive increase in AI model capabilities, concluding, "The ability for one person to get much more done in 2030 than they could in 2020 will be a striking change." We agree with this assessment and have benefited from incorporating AI into our daily workflows for professional and personal purposes. As we've discussed in prior correspondence, we think investing in firms involved in the AI infrastructure complex, from energy to industrials to semiconductors, along with AI model providers and beneficiaries, makes sense, albeit at reasonable valuations that leave upside for continued growth. We're happy to discuss where those opportunities are at the moment and how they may fit into your own investment and risk framework. Despite the tense moment in geopolitics at home and abroad, we still think this is a promising time for long-term oriented investors and an exciting time to witness the progress in technology. As always, please let us know if you have any questions about today's discussion or would like to talk about your personal investments. Thank you and have a great week.